Hey guys, how are we all doing? It's Dan from Trading with Dan here. So I hope we're all having a great, great holiday, great bank holiday in the UK. Also, it's Memorial Day in the US, so happy Memorial Day. That's what you meant to say on that day for all you US guys out there. So right, it's our Forex update. So straight over to the charts. Euro US dollar. This is my favorite. You guys know this. This is the short. We're in this short. I'm in this short now anyway. You can see we've had some nice trades off the nines on the 4 hours. I'm fundamentally very bearish of this asset. If you look at the CFTC futures positioning for basically the position of Wall Street. For some reason, do not ask me why, but they're very long of the euro. In fact, I do have my reasons why I think they are long the euro. But they are currently very long the euro. So I always think that the crowded trades basically will be the pain trades. This is how markets work. Markets always take most amount of money from the most amount of people. So that is an overcrowded long, so I'm looking for them to get squeezed and get some serious downside basically. If a lot of people are long, there's not a lot more people left to go to buy long, is there? So there's less buying power to push up the price. You often see this. Sort of market sentiment is often a contrarian indicator. Positioning is a contrarian indicator. All these things are contrarian indicators. You might think, well, the euro's had a pump up. It's had a big pump since everybody got long, but it hasn't really, guys. I mean, it hasn't actually had a higher high here. So we topped out at what is basically a lower high. So we've got high, obviously ignoring this one. We're going to ignore this one because it doesn't fit my narrative. But anyway, you get what I mean. High, and then lower high. So, yeah, so I believe this is going to come down. So we had our daily trade set up here off this daily 9. We didn't come down immediately when we needed it to. So we were basically waiting. And yeah, so we've eventually broke under, and that was our trade. We spoke about this before anyway, and then that was the projected target that we drew on. So we still got to get back in the pennant and break out the bottom in what is in effect a bump and run trade. So like you bump underneath and then run back to the other side, so sort of fake out, get the momentum, hit the stops, get the liquidity, and then bang. So yeah, look on the daily. This was obviously where we this is not where we drew our chart actually, or our lines, but yeah, the daily, look, you can see we sort of like faked out the pennant and back in, nearly back in, and I expect us to carry on playing down. But yeah, TD count wise on the we're just getting price slips here on the 4 hour, whilst we in effect retest the pennant, the outside of the pennant as support. I mean, a lot of traders, this is the sort of thing, you get the breakout, the retest, and then you buy. So I mean, we will be possibly getting more longs piling into here at the retest, thinking we're going to go up, but I don't believe that will happen. But we will see. I reckon in about 30 seconds I can tell you why I'm fundamentally bearish of this, and then why basically a lot of the street is long this. Basically, the Eurozone is made up of a lot of different countries, and obviously you guys know that, and it's difficult for them to come together on decisions to do things. So the US, for example, so the other side of this equation, they have a more central, obviously are more centralized in their monetary and fiscal policy. So the US can obviously weaken their dollar quicker and easier than the euro can, and because markets have been rallying up, there's obviously parts of the Eurozone are not going to be like, well, let's do more easing, so that's going to be inherently stronger for the euro. But what will happen is, what I think will happen is we will have more weakness in the markets, and then that will then sort of drive the European governments to decide that they're going to have to just start cooperate and start to weaken the euro, and then we'll get a big move down. But as it stands, when the stock markets are looking better and people are generally feeling better, there's obviously a lot more friction in the eurozone for them to ease basically monetary policy. Because like the Germanys and the likes, and basically the more fiscally prudent countries in the eurozone won't want to do that, and then you got the pigs the Portugal, the Italy, the Greases, and the Spains. They're called the pigs, and they basically they want cheaper, well, basically money. But yeah, but like I'm saying, they're not gonna, whilst things are looking generally okay, they're not gonna get that sort of cohesion between the whole of the Eurozone to act. So if you are of the view that stock markets are going to take another turn down, or the economy is not going to V-shape recover, then you have to be short the euro US dollar basically. So right, I took longer than 30 seconds, but I've explained that to you guys anyway. Right, cable. What is going on with cable? So this was our trade, our buy trade off the 9. It was a daily 9. We'll get the daily chart up. So we had a buy trade off a daily 9. We had a bit of a move. It didn't work out. You could either have a, well, here's a daily trade, the 9 was off, here was the buy. Yeah, we basically did pretty much close these candles up just. So yeah, you would have taken a long trade and you'd have to decide where you were stopping out. I mean, you would have possibly have your stop under basically this candle here, or even under the 9. So you're potentially still in this trade waiting for us to maybe go back up. But at the current time, you are sat offside in that trade. But yeah, if we look to the 4 hour, I do much prefer playing 4 hour candles, just because I believe, well, I just think they work better. They're just easier for the trading, like the pace that I trade, the amount of trades that I take, the charts that I look at. Dailies are great when they pop up, but it's more the 4 hours that I react to. But so we had a 4 hour 9 here basically, so this would be something I'd actually, rather than be like sat long in the day trade, I'll be looking to go short here. So in reality, my actual trading, I didn't take this because of reasons that I've explained before, that I am actually bullish of the dollar. So this sort of goes against my thesis of going long this. This was just a daily 9 that came up, and that's all I was looking at playing. But when I would have seen, because I didn't take the trade because like I just said, when I saw this 4 hour 9, I would have been out of the trade waiting for a retrace. And then potentially buying again at the same line again if we break above, or if we get a 4 hour buy 9. So that's what I'm looking at in cable. But yeah, like I said, I'm not actually looking to trade cable. It's more the dollar index and the euro US dollar. So right, euro pound. Right, so we drew a trade on here. We drew it. So we must have drawn this off a 4 or 9, because this would have been a 9, unless it's a daily. Maybe it's a daily. Yes, it's a daily. Right, so what we actually had, I'm pretty sure when I told you about this trade, this 9 candle was looking stronger. We were up here. So I basically set the level. This is where the candle opened and where it closed. We opened here, we moved up. So I then said, right, my level to sell will be basically lower than the open of this candle, this 9 candle, which is why we drew the line here. And then obviously this is what our targets were on the daily based off this. So you can see we're in that trade. Another trade here, sat in profit. This is a trade we would have taken. This is a trade we would have taken because, again, this trade we're expecting this to go down, which is expecting the euro to go down, and I'm bearish of the euro. I think the euro's overbought. It's too much of a crowded trade. So this is one we would have been in. Also, the 4 hour would have got us even better entry. So this would have been a 9 candle. Well, actually, I don't know if this would have been a better candle, a better entry, because this pretty much came down, and you would probably draw a line under here for the actual entry. But yeah, so we'd have got a better entry on the daily on this one. So sometimes it works, sometimes it doesn't. Sometimes, well, it's not like it works and doesn't, but sometimes you'd get a better entry on the 4 hour, and then the daily. Usually you will get a better entry on the 4 hour and the daily, because when you're looking to take these trades, you sort of zero in on the lower time frames to pinpoint your entry. So then you can, some people, when we're looking at the 4 hour, some people will then zero it down even to the hour to look at this, the hour. See, did I get any 9s on the hourly that I could have got in at? And they didn't, but they would have been watching it, looking for it, seeing if they could find one, because you just want to get yourself that optimal entry, don't you? You sat watching and waiting for the trade, so why not try and get the best entry? But anyway, so obviously these will line up with moving averages on the daily. So yeah, so obviously the 50 and 21 area, and then obviously the 200 after that. So this is our first target, so we'll see what happens in this. So yeah, euro sterling, a sell, nice daily sell. On side, in profit, I mean, I would be looking at putting my stop loss maybe halfway up this candle, maybe just give myself that amount this amount of loss that I could potentially get from the trade at the moment, until we move further down, in which case I'll make it to break even or maybe into profit. But yeah, this is what is going on with this trade. So another great trade there. So far we've got this trade short in profit, and this trade here short in profit. Dollar Japanese yen, daily, nothing going on the daily, apart from we did have this great daily 9, and there you go. And where would our trade have been? It would have been basically here. The buy level would have been there. We'd have had orders in to buy, bang bang bang. Well, I say orders to buy once the daily closed there. So it would have been this candle here. So we would have bought here. The close of this candle on that daily would have been here. Would have been in at 106 and we're now at 107. Well, we went straight up to 107, came down a bit. And then yeah, then we basically got lift off again. So this would have been a trade. Obviously we've not been looking at this every day, otherwise we would have noticed this. See if we've got anything better on the 4 hour entry wise. And so here we go. This is where we sort of would have seen the extra confluence. See, this is why I prefer 4 hours, guys, because you have the daily in mind. So you are kind of waiting for the daily. You get the 4 hour 9 here. So then you are thinking, right, I'm going to be buying soon, but you're mainly getting on the daily here. You can enter on 4s. I do enter on 4 hour 9s, but when I know that I've got the daily there also, I'm sort of waiting for the daily entry, because if the daily 9 is there, obviously that's going to take precedent over the 4 hour 9. So obviously I'm waiting for the daily entry, but then you can see we had the rally up. That first rally up got us to a 4 hour 9, and we'll be looking to take profits on that, even if it's only partial profits. We'd want to take something off here because it's a 4 hour 9 and we know how they work. And also we're actually at perfectly at the 402 at the 4 hour 200 period moving average here as well. So then we came back down to the buy 9 and then just get back in the trade there, get back in on the, and not only is this on this 4 hour time frame is a 9, it's also a test of the 50. It's also basically pretty much a test of almost the actual level we bought, basically the level here. It's basically a test of this level. So another perfect entry. So you got the buy, you got the sell. You could have even gone short, but I would have maybe not advised going short. I personally wouldn't have gone short. When I pick a direction in an asset, and I don't have a fundamental view really, other than obviously a dollar strength view, which you know that I have. So it's putting a dollar strength view aside, I will just have to have a bullish view based on the daily 9 being the highest time frame 9. So I'd expect that reversal to go up. So I would have a bullish view based on the daily 9, and also a bullish view based on actually dollar fundamentals. But I wouldn't this 9 would have superseded that. So what I'm trying to say is I would be only looking to play this on the long side. So I would have been buying here, buying here. This is where the daily 9 was, so where my entry was. I would have got out partial or all of my trade at the 4 hour 9, partially or all. I then would have held, basically either held the rest or waited till we got to this 4 hour 9, and then I would have put on the rest of my position again. So if I took off all the position, I put all the position back on. If I took off part of the position, I put that part of the position back on. And there we go, we're winning that trade. So another example of how you trade. Basically, well, this is an example of how to trade, guys. I mean, you're trading to make money, and this strategy makes money. This indicator makes money. This sort of analysis, this way to this way to analyze the market for trade entries, it works. So this is a way to trade. Euro, Japanese yen. This is looking pretty similar here. There we go. I mean, that is a perfect. You don't get better entries, better trades than this. I mean, you have the 9 perfectly at the bottom. You basically will have your buy above it. You have to have your buy above it. You can't really jump in on 9s on the actual candle. You have to have basically a breaking above it, a 1 trading above it, a 2 trading above a 1. But obviously these are red ones because we had moved down quite quick. But you can ignore that, and you're just looking for a break above the 9 for your buy entry. So like obviously I'm aware there's a 9 here, but we didn't basically. I mean. Well, it would be here, wouldn't it? This would be where you'd buy, and we didn't obviously clearly get anywhere near there, so there's no buy trade. That's fine, no buy trade. This could have carried on going down, no buy trade. It's no problem. So, but we did happen to have the buy trade, excellent, and then we keep going up. And then you can see, obviously we get the 9 here, so you could think about taking profits. or you could hold some of it, take partial profits. Like I say, take partial profits. You don't really get a good re-entry again. The market keeps going, so then you're just running half part of the position. It's no problem. It's just is what it is, isn't it? And then yeah, and then there's nothing else really obvious on the 4 hour here other than obviously that. So there you go, another great example, just another great example of how to trade, or just a nice trade. You wait for these setups and then you take these setups. Like we've got no other, well yeah, we hadn't, yeah, so obviously, sorry, we spoke about that one, didn't we? Yeah, so we had a 9 here. Okay, excellent. So where's our sell trade? Our sell trade is below this 9. The market keeps going, it doesn't get there, so we don't take the sell trade. If we wanted to leave the actual line on, because you're just getting price flipping and nothing really going on, you could leave the sell entry under here still, and then yeah, we basically got a 4 hour close under there, so you could be in a short trade, sat on a small amount of loss here. I mean, I don't recommend getting in these trades based on a 9 so far back, but it is still fine to do that. Once you start breaking down these levels, then you would assume the trend is your friend and you're coming back. So these aren't bad trades to take. These are trades that I do take as well. So there you go. Aussie dollar, right? This is another one of my fundamental views. Again, it's based on a strong dollar theory. It's based on more weakness in the world economy, and especially especially based on on Australia getting hit. I think Australia is in an extremely precarious position economically. I just would not want to be. I think I don't think they've had a recession in Australia for 40 years, so this is their first one. So they don't really have much experience with recessions. They've got a massive gargantuan property bubble in Australia that they can't keep going any longer. I'm not going to go into details of that, but they can't keep that going any longer. And then also Australia is its biggest trading partner is China, and I mean China's not doing so well. Obviously there's rhetoric, there's naval vessels, there's stuff going on, political games going on, where China basically is directly threatening Australian trade with Australia. So I don't think Australia is in a good position. So I think Australian dollar is going to weaken. Oh sorry, this Australian dollar is US dollar, right? So sorry, yeah, so I think this is going to go up, because I think the Australian dollar is gonna what am I talking about? I think this is gonna go down, because I think the Australian dollar is gonna weaken and the actual dollar is gonna go. I was right the first time, thinking this is gonna go down. This pretty much is following the stock market, but look at that beautiful 9. So you could either enter at the break of that candle, you could enter when we broke above the high of the next candle. I mean, that's a more typical entry when we break above here. So then enter there. I mean, if you did enter around that 9, you sort of immediately got in profit. You can kind of see the retest of the entry line above the 9, and then that's the perfect lift off spot. So that's on the daily. Let's have a look on the 4 hour. See what we're going on the 4 hour here. Some beautiful 9s. Look at these trades, guys. I love the 4 hour, I do. Bearing in mind I'm bearish on this, I would have been taking the sells, mainly the sells, so I'd have been taking this sell on the breakdown here, this sell on the breakdown here, this sell on the breakdown, and then, well, this sell here didn't break down that well. It may have whipped you into a trade here. But yeah, you'd have gone offside. You probably would have stopped out of this, to be honest, and then you got a potential buy one here, so you definitely would have taken the trade off there. But yeah, Aussie US dollar. I'd basically be looking for a couple more 4 hour candles to get us to a 9 here, and then more downside. That would be my view on that. One more. The dollar index. It is below 100. So yeah, we've got this is the trade. The based on it must be based on the 4 hour trade here, guys. So this 4 hour 9, we've got this trade going on here. This is for weakness. This is a trade I don't expect to happen. Don't expect to be triggered. But if it does, it does. If it does, my view on the dollar is wrong, and we come down and we maybe keep going down and have a profitable trade. It's not what I think will happen. I do think we'll keep going up. But that's where the trade is anyway. So what have we got? Nothing, just price flipping on the daily. So we'll have a look at these just for the sake of completion. Our three musketeers. So yeah, great nine. I mean, there's your sell entry, just great, fantastic trade. The same here, there's a 9, there was your sell entry. You got profit, you maybe took profit, or you got stopped out, break even, doesn't matter, either way, it's just a trade. And then here you go, this one, you're running this one potentially for another 3 days to a red 9, and then you take partially or all of it off. I mean, on a daily, I'd recommend taking all of it off, and just, that's it, just great trade. If you hit a 9, run it for 9 candles, fantastic, that is the dream. Anything on the 4 hour? Yeah, so if I was short, I'd be maybe looking in the next, we're going to get a red 9, 4 hour 9 soon, so I'm looking to take this off. Had a nice 9 there that rallied the price in the 4 hour. Yeah, so let's have a look at the US dollar Mexican peso. I mean, we're still waiting for our target here from breaking this candle. We drew this triangle. I don't know if we had any 9s, because it was difficult for us to get a 9 based on what was happening. But yeah, this is just a formation trade. This is just one of those textbook trades. But if I was short this, I would have well, I would have been, yeah, I would have taken partially off here, because I would have had the 9. I would have looked to either taken off on the 9 candle, or if you broke above, I'd have taken some off. But then we came back down, and again I'll be doing the same here, looking to take some off, probably just half the position again if I basically was short half the position. But what I probably would have done is above this 9, I would have taken it off, and then below the 9 I'd have added it on, and then I mean, you're sort of expecting at any point like a big drop, but then yeah, I would take partially some off, and when we get to this next 9, and then yeah, and then look to enter basically once we break below there again, and just keep running the trade. But this is a pattern trade, this is a textbook pattern trade. You see these all the time, descending triangles, bam bam bam, descending top, squeezing price action, and then we fall out of bed. I mean, it's just so textbook. We had this drawn in before this happened. We had this line target drawn in before this happened. So yeah, US dollar, Turkish lira. Wow, what is this based on? This must be based on the daily. Yeah. So we had a 9. Don't ask me why I put the I put it so high. Are we basing this off something else? Are we basing this off a 4 hour? Oh no, it's not. We basically so what we had was, and we think we're going to go up to here and go down there, or we're either going to break down or come back up. So why did I think that? What are we basing this on? Oh, we must be, yeah, so we are basing this on the 9. Okay, right, I know what's going on. So this is a target. This isn't basically where we buy or sell. What I'm saying is, here, what we did say was basically this is the 9, the entry is above the 9, which we look like we're getting, and then our target is basically this moving average, where we're either going to hit the moving average and come back down, or we're going to break through and keep going up. So yeah, that's what that was there for. Sorry, I'm just a bit tired today. Yeah, so this wasn't an entry. I was looking at it thinking that's clearly not an entry. But yeah, so the entry basically would have been here. So the top of this, breaking above this candle, breaking above this 1 is your buy. And then yeah, I mean, I would just be careful around this zone and then play it accordingly. So there we go. So anyway, so thanks for listening, guys. That was our Forex update. Remember, it's not a financial advice. I'm not a financial advisor. Always do your own research, and I will speak to you guys tomorrow.